Hello and welcome to another episode of the Swing Trader Weekly Status Update. It's Justin Nielsen here hosting along with Chris Gessel. We had a last-minute substitution on the field. Mike Webster had some internet issues, so Chris was kind enough to fill in. So welcome, Chris. How you doing?
I'm doing well,
I feel like we don't get to chat as much.
What?
I feel like we don't get to chat as much.
Well, especially when I'm not in the office or working.
Yeah, but you will be in the office coming up here soon, so
Yes.
that's going to be good. We're going to have our own little IBD Live get together, soon. So for those of you watching IBD Live, you might see more faces in the office. But let's get to Swing Trader because that's what we're here for today. And I'm going to go ahead and start with one of our removals today. We're going to get right into it with Dutch Brothers. And, just for the overview on the market, I mean, the NASDAQ composite looks fine, maybe kind of some stalling action today, but I don't know. I'm always of the mindset when you have such a tight spread, it's really kind of hard to call stalling, but it did have kind of that look. Volume wasn't up there, so it's not going to most likely count officially. But on bros, this was a pretty dramatic outside day, closing at the lows, downside reversal. So this is one that we had a full position in. It was looking fine. We had a nice 15% gain from our entry, but we had added along the way and trimmed. So what's your take on downside reversals? This is something that Webby and I covered in detail on the podcast last week.
Right.
For the markets mostly, but we're seeing them a lot in stocks too.
Yeah, especially if you make a new high and then reverse lower and have an outside day, rarely a good sign. I mean, sometimes some stocks can shake them off, but it usually means you're going to get more weakness.
Yeah. So we're keeping a quarter here for now, just to kind of see if this is a one-time thing or if we get a little bit more weakness. But again, we had a full position here, and it dropped pretty quickly today. Another thing I should mention, just something that we mentioned last week, and want to kind of just get folks' thoughts on it. We did have that update to Swing Trader where we now are showing position sizes in the current trade. So hopefully that's something that's making it a little bit easier for you. We did have a little glitch. Sorry about that the other day that, the Swing Trader went down for a little bit, and then we had to, kind of put in all the trades from the past day, and it was a little bit of a mess, but they found out what the problem was and fixed that. So we're strumming along here. And other issues with the market in your mind? I mean, you've done a lot of studies. You've used kind of this AI tool that our good friend Praveen made, and the Qs right now. One of the things that we've been noting is that the Qs are, about 8% away from their 50-day moving average line. SPY is about 4.5%, not quite as extended from its 50-day line. Is that something that's concerning to you?
Yeah. Well, for SPY, usually once it gets 5% above the 50-day, that's where you got to start looking for a pullback. So it's, in slightly better shape. For the Qs, for the NASDAQ, they're at, at the open this morning, the NASDAQ was 8.3% above the 50-day. And if you go back to, let's see what day it was. To June 17th, that day it closed 8.3% above the 50-day. And over the next week, we had a pullback all the way to the 10-day or slightly below the 10-day. But I mean, it just seems like a pullback is likely at some point.
Yeah. And we were honestly expecting a little bit more, especially after the downside reversal here on the 20th. And then we got another downside reversal here on the 28th. But man, this market just doesn't seem like it wants to go down. We were discussing a hedge. You weren't actually part of this conversation, but I might as well get your thoughts now. We were
Okay.
discussing a hedge. We had done that after the June 28th reversal, and then we pretty much immediately had to cover the
Yeah.
hedge because
Right.
the market just kept on going up. One of my concerns with putting on a hedge right here is that the market indexes were kind of going up, and there's a lot of stocks that were coming in, especially in the software area. So I guess my concern was, could we get in one of those situations where your market hedge is losing you money and your stocks are losing you money, and so you're getting hit on both ends. So what we
Yeah.
decided to do was just raise some more cash. What is your take?
Uh, y- y- yeah, I feel similar. I mean, I did put on a hedge today just because on the intraday charts, the Nasdaq gapped up. It had been trading, fairly tightly, and then gapped out of that area, and then undercut the morning low. And I was actually expecting a much bigger retreat, and then it just kind of took it easy the rest of the day. So, and I think it's up a little bit after hours, right? Yeah. So I guess I wouldn't be surprised if we get a pullback, but this could fake us out again. And if it takes out the day's high, I'm going to close my personal hedge.
Mm-hmm. Now let's talk about fake outs, because this has seemed to be a market that has been a little bit tougher. We've been seeing, a lot of times we've been looking at, I mean, even today, we were looking at a number of financials. They
Mhm.
look like they were ready to go, but
Right.
I'll be honest, I was saying that back here too. And I was saying
Yes.
that back here. And I was saying that back here. And it just seems like there's a lot of these rotations that seem like they're on the verge of happening, but then there's just no follow through. I mean, same thing with the Russell 2000. This is IWM, the iShares ETF on the Russell 2000. There were a number of these points in time where it looked like it was getting ready to go, but then it just couldn't. And now it just keeps
Mhm.
on hitting its head on the 50-day moving average line. Do you find this a little bit unusual in terms of the rotation that you're seeing, or lack
Yeah,
thereof?
because the rotation uh, had, there was a slight rotation into financials for a while,
Mhm.
and maybe some energy stocks for a couple of days. And the problem is, uh, the rotations are very brief. Now there are some stocks like lone wolves out there that they pull back and they'll make a great run, but it's hard to find a group of
Yeah.
stocks doing that right now. So that makes it challenging.
Yeah. Dominic came up with a new term, rofaction. But that dude's funny. I'm not sure where he gets that sense of humor, but so you know what? Let's go ahead and Dominic, I'm going to have you go ahead and stop the share on this one, and I'm going to share another screen real quick. Let me just go over there. Go to the slideshow. And I'm going to just kind of show how things have changed basically in just a few days' time. We're going to look at this is where we were at with the close of July 5th. We had a big weight in software. You know, it was over 30%. We were pretty concentrated in internet. Chips, we had brought that down. We had a full position in SMH, but we had brought that down. We had some leisure, we had some retail, so spread out, but definitely software, big, internet, and retail also pretty outsized bets. We had gone from 25 stocks with a lot of quarter positions to down to 11 stocks with a lot of full positions, and even 5/4 positions where we were going a little bit heavier in certain names. I'm going to go ahead and turn to where we are right now. We went from being slightly on margin to at the close today being with 12% cash. We introduced a medical name, reintroduced, I should say. We added another retail name. We brought an energy name in there. Software down to 7.7%. That was probably, these two areas were the biggest change, because if you look at, just what the weights were at the July 5th close, the July 9th close, you can see that software basically went from 38% down to 7.7. So basically dropped 30% there. We went up a little bit or down a little bit in retail. That was kind of a shifting of things. And then the other big place was that we had about an 8% on margin to now 12% cash. So raised the cash weight basically 20% in effect. So, software seemed like it was where it was at. A lot of software names were looking interesting. But then, things kind of turned today. What was your take on software?
Well, I think it really started turning yesterday when
Yeah.
Now sold off, and CrowdStrike, which is on Swing Trader, a lot of us, including myself, have a position in it. Although I think I'm half hedged on it. And again, this has been happening a lot where stocks open great in the morning, and then all of a sudden, within maybe the first half hour of trading, maybe they'll hold it. But in the case of CrowdStrike, it started pulling back almost immediately, and closing the lower half of the range and everything. So this is a stock that had been trading very tightly and had the look that, okay, it's going to break out and resume its run. But yeah, didn't happen today. So
yeah,
I think it's more likely to happen if we can go sideways for another week, or maybe pull back to the 10-day, the whole the 10-day or the 21-day. That would be ideal, the 21-day, and then that'll give these stocks and some of the big investors more confidence to pile in and unleash new moves in these stocks.
So you also mentioned ServiceNow, so I'm just going to pull that chart up. Again, things were looking really great with this stock on the 5th of July, but then we exited yesterday, and this was kind of the first, the first warning sign. The shot across the bow, absolutely. And this also led to us getting a little bit more, I guess, defensive in software in general. I mean, now, basically came up to 800 and got turned away. And, look, it was a downgrade, which, we don't necessarily care too much about downgrades. It's the reaction to them. And this reaction was not great. And it also kind of brought a lot of software down with it.
Right.
IGV didn't look too bad yesterday. It was still an inside day. But then today it really kind of accelerated. And that's why, between yesterday and today, we've, dramatically decreased our software holdings. This basically came up to this old high. And look, this could be a handle right here. That would be very normal. But again, that would be very tough for us to sit through on Swing Trader. Any other thoughts on software names?
Well, I'm still bullish on CrowdStrike and want to sit with it, and hopefully it will break out soon.
And I do have a position on this myself too. I should have mentioned.
With
I did
ServiceNow,
take my IGV position down. I had that earlier today.
Okay. With ServiceNow, 2 days wiped out 2 weeks worth of gains.
Yeah.
So that's just not the kind of market you want to be in.
Well, and it's kind of a reminder that sometimes you have to act, pretty quickly when you start seeing the weakness, because a pullback can just take away a lot of gains, and especially for swing trading, that can do a lot of damage. If a lot of times we're doing shorter term trades, and so we don't have the huge amount of time and cushion that maybe a product like Leaderboard would have, and so it's more critical that we act on things very, very quickly. Any other thoughts on your end of stuff that you're seeing out there, kind of things that you want to share with the subscribers?
Well, I really liked how you were slowly moving to fewer and bigger positions. And because this is not a very broad market, and I understand that, you throw a lot of names out there and then let's see what works and start building them up. But I've been surprised at how so many of these just they stall or they reverse. It's been a very tough market, and I think maybe even though the indexes are moving higher, it feels like there's a correction going on under the surface.
Yeah, and make no mistake, the names that we're concentrated in, it's a little bit easier to be concentrated in something like Amazon, right?
Mm-hmm.
You don't feel like you're taking a big risk. That's our outsized position where we have more than a full position in Amazon. But again, these are also the names that are working. They're still holding up well, even when a lot of the software areas were coming in. But again, what we decided at the end of the day was, hey, let's raise some cash, just in case, because a gap down tomorrow would probably really kind of put the pressure on us and make things a little bit uncomfortable. So,
but what's nice, looking at Amazon, so as it was coming out of that base, lots of blue volume. There was like one bad red day, but that might have been at the end of the month. And so
yeah, that was the end of the month, June 28th. Yeah. So,
but since then it's, been going sideways and the volume has been very quiet and restrained. So this is when I'm not in this, but I would love for this to continue, sideways a little bit longer, or even if it, if the market pulled back and then it popped out after, a slight correction, I'd be all over it. So.
Yeah. And I do have a position in Amazon myself. So, well, you know what? I think that pretty much wraps up the main talking points that we were going to hit today. Just a reminder, do give us that feedback. We're always looking at that. One of the things that we're going to be talking about in upcoming episodes, of course, is earnings season. We know we may be shifting. If we've got enough cushion on some of our names, we may shift a little bit to holding a quarter position in some of these stocks, but that's going to really depend on what kind of, we'll look at the options market, right? What kind of expected move is there? How much cushion do we have on it? And, what the status of the market is itself. So be on the lookout for that. But remember, we're always going to be flexible. We're kind of trying to bend with the breeze and, recognize that this has been a little bit tougher of a swing trading environment. So we're trying to make sure that we don't take big hits. Well, hey, Chris, thanks for jumping in at the last minute as a substitute. Always a pleasure to have you here. And thank you to Dominic as well for taking the reins on the producing. And for those of you that are IBD Live subscribers, don't forget to join us. We're also doing live coverage starting 10 minutes before the market open and going a full hour and a half. If Dave is hosting, we're looking at 2 hours. So it's a great show, and you can definitely, if you haven't tried it out, it's great to watch. Investors.com/IBD Live, and you can do a trial. Chris was on today. I'm going to be on, I think, on Thursday. Webby's going to be on tomorrow, as long as his internet cooperates. So a lot of great stuff. And don't forget, we also have special guests like David Ryan today. He was on, he comes on every Tuesday, 3-time U.S. investing champion. And then also another U.S. investing champion will be on Friday. George Kachuk will be returning. He was investing champion in 2020, which was a phenomenal year. So being a U.S. investing champion when, so many people had a great year, I think was pretty incredible on George's part. And so we'll hear his thoughts on Friday. But thank you so much for joining us this week. We'll see you next week.